I want to say, like, I think gold's going to $5,000 over the next probably 5 years. I own gold. I think everybody should, if you don't own gold, you should absolutely go buy some gold. But I don't plan on it going to $5,000 next year and changing my whole life. I think gold will be there to kind of protect what I already have. I don't think it's going to make me rich. And so I look at gold a little different than most people. And so I think it's important to own gold, but I would expect gold to go lower before it goes higher. I think sometime in the early part of the year, maybe we can buy it 1,900, 1,800. If you get these pullbacks, I would be a buyer of it.
In a recent analysis, Brent Johnson, a prominent figure from the Santiago Gold Fund, predicts that gold will reach $5,000 over the next 5 years. Despite increased volatility in recent weeks, the gold price has been predicted to stay above $2,000 throughout 2024. Economic experts attribute this steadfast performance to increased volatility, geopolitical tensions, and global economic circumstances. J.P. Morgan, for instance, forecasts a year-end gold price of $2,000, with an upward trajectory expected to continue into record highs in 2024. As highlighted by Johnson, one key driver is the role of central banks. Contrary to popular belief, he suggests that central banks hold gold not solely out of concern for the U.S. dollar, but as a safeguard against challenges their local currencies pose. This perspective gains significance, as seen in the recent devaluation of the Russian ruble, which has plummeted 40% against the U.S. dollar since December 2022 due to trade sanctions and declining export earnings. Supporting Johnson's view, the World Gold Council's report reveals that central banks globally continued to amass gold reserves aggressively in October, resulting in a substantial monthly net increase of 42 metric tons. The prospect of a severe debt crisis further emphasizes the strategic value of gold. Johnson suggests that in such a scenario, countries might resort to selling their gold reserves to navigate the challenges on the global stage. Monitoring the commodity market, gold has experienced a remarkable surge, increasing by 13.19% since the beginning of 2023. Reaching an all-time high of $2,150 in December of the same year, according to Trading on a Contract for Difference tracking the benchmark market. Notably, Johnson practices what he preaches, holding gold as a crucial asset protection component. His stance advocates for a broader understanding of gold, not merely as a quick wealth generator, but as a resilient means to safeguard existing assets. Let's delve into key moments from Brent Johnson's interview with these video clips.
Central banks around the world know that we potentially have this looming debt crisis. They, in many ways, I think central banks hold. I think central banks hold gold for a couple of reasons. Number one, I think they see it as insurance, just the same way maybe you and I do. I think one of the reasons they hold it is because if they hold it, they can control it because nobody else has it, right? So it's like if you put somebody in prison, you control them. Even if you're not planning to do anything with them, just the fact that you have control of them keeps them from other people being able to use it. And the other thing is, I don't think countries around the world are buying gold because they're worried about the US dollar. Okay. I think they're buying gold because they're worried about their own local currencies. Dollar's kind of flat, maybe down a couple percent for the year, and it's down over the last couple of days, a couple percent. It's still up versus over the last couple of years, it's up dramatically versus all the other currencies in the world. And so the idea that all these central banks are rushing to buy gold because they're so worried about the US dollar, I think they're buying gold because they're worried about their own currencies. They know what problems they have. They know they're going to have to print more of their own currencies to try to fight the effects of this. And, they want to have an insurance policy and kind of a steady reserve, just like everybody else does. And so I would say is if we get into a severe debt crisis, it will not surprise me at all if some of these countries end up having to sell their gold to continue operating on the global stage. Now, I'm not saying that all the central banks are going to come out and sell all their gold. I'm just saying part of the reason that you own gold, part of the reason that I own gold is that if a crisis ever develops, and that is the most liquid thing, I can use that to get through the crisis. Yeah. Same thing for a country. Again, I don't think countries want a gold standard. If countries wanted a gold standard, they would have a gold standard. But I think they want currencies that they can control. But if they get into trouble, I don't think that they're against using their gold reserves because that's why they have them to begin with. Now, I want to say, I think gold's going to $5,000 over the next probably 5 years. Now, I don't know if it's going to go right there tomorrow. I think recently sentiment got way too high again. Positioning got pretty stretched, and I wasn't surprised at all to see this pullback over
When
the last
you
couple
say
of weeks.
recently, you mean like last couple of weeks?
Over the last, over the, just think about it. In October, gold was around 1,800, and as recently as a week ago or 10 days ago, it hit 2,150 or whatever it was.
Yeah.
Overnight, pulled back pretty hard from there. We had a really good bounce over the last couple of days. I own gold. I think everybody should. If you don't own gold, you should absolutely go buy some gold. But I don't plan on it going to $5,000 next year and changing my whole life. I think gold will be there to kind of protect what I already have. I don't think it's going to make me rich. I look at gold a little different than most people. And so I think it's important to own gold, but I would expect gold to go lower before it goes higher. I think sometime in the early part of the year, maybe we can buy it 1,900, 1,800. If you get these pullbacks, I would be a buyer of it. Again, I can't stress enough how bullish gold I am over the long term. I don't think we're going to 2,300 by March or something like that. Now, if we do, I'll raise my hand and say, you know what, we did. And that's why I own it. But I don't mind being wrong if gold goes up.
Brent Johnson's perspective on the continued rise of gold, fueled by heightened demand from Asia, aligns with a broader trend in the world's largest gold-consuming nations, India and China. The dynamic nature of their gold consumption, where the top spot alternates between them, holds significant sway over more than half of the global gold market. P.R. Somasundaram, the CEO of the World Gold Council, acknowledges that while there might not be an explosive surge in demand, there's an anticipated uptick. Johnson's assertion regarding the motivations of Chinese citizens aligns with the more significant trend observed in China's gold accumulation over recent years. Despite the country's inclination to keep its gold purchases discreet, analysts estimate a substantial acquisition of approximately 400 tons, signaling a strategic move. In a significant move last June, the People's Bank of China launched a program allowing Chinese citizens to convert their renminbi savings into physical gold easily. This initiative aims to expand gold and silver bullion investments, making the opportunity accessible even to those with lower incomes. Let's get back to the interview.
I remember 10 years ago, when gold was I guess it was about the same price, and it had made a pretty good move over the previous 5 years. Let's call it, from 2002 to 2012, gold did very well, right? And I remember during that time period, a lot of people would refer back to the early 2000s, say that's when central banks were selling gold. It was such an obvious signal. Well, now central banks are buying gold, and everybody's, it's such an obvious signal. Now, why was it such an obvious signal 20 years ago when they were selling it? Why is it also? It's the complete opposite. Why were central banks so stupid 20 years ago, but now they're so smart when they're still run by this kind of the same people? So I kind of get a kick out of the central banks are doing it, so you have to do it, when it was the exact opposite 20 years ago. But listen, I think it is indicative that, and the continued demand out of Asia for gold. I think gold is going a lot higher for a lot of the reasons that we've discussed. Whenever sentiment gets really high on something, I automatically kind of like recoil, because when you buy something that it's at its all-time high and everybody's losing their minds and sentiment is through the roof, it almost never works out in the short term. Yeah. And I'm not saying it can't. I'm just saying that's typically not the time to go buy a bunch of it. If I lived in China and I was a Chinese citizen and my currency was the yuan, I'd be buying the hell out of gold as well. I mean, I don't think the average Chinese citizen is buying gold because they're worried about the US dollar. Most of them are trying to get their money outside the United States and get it outside of China and get it into dollars. Yeah. I think the reason they're buying gold is because they know that China has enormous problems. Everybody's talking about the Fed now moving towards an easing policy. Well, China's had an easing policy for 2 years now, and their currency continues to fall. And so I think, and their real estate market is under real pressure. They've got all kind of problems over there. And so, it doesn't surprise me that a Chinese citizen wants to own gold, considering all the challenges they have. Oh man, the US is totally screwed. Let's go buy some gold. I think they're saying, wow, we've got some big challenges here at home and our currency is probably not going to hold up. Let's go buy some gold. Most people, they say, oh yeah, we don't want these stupid politicians. But at the end of the day, if their business goes under and they want the bailout, right? If the government offers them money, they're going to take it, because they're scared. And it makes sense. But that, and that's what Milei's got to deal with. To do what he wants to do, he's going to have to economically hurt a lot of people. Now, he ran on that, and the people that voted for him kind of know it, but they haven't had to actually go through it yet. right? And that's where it's going to get tricky.
And what's
this is the same thing for any other countries that are trying to de-dollarize. They try to do these little things where they can, set up trade agreements with one another country, or maybe they start nationalizing their gold reserves. But the problem is when you do this a little bit, a few people get hurt and they start pushing back politically. You become unpopular, and it's hard to see it through, because it's one thing to say it, it's another thing to actually live through it. And so, saying something is one thing, actually being able to pull it off and implement these changes is quite another.
What are your thoughts on Brent Johnson's prediction that gold will reach $5,000 over the next 5 years, considering the factors of increased volatility, geopolitical tensions, and global economic circumstances? What are your takeaways? And do his insights align with the broader trends observed in the gold market? Share your thoughts in the comments section. If you liked the video, please subscribe to our channel. And remember to activate notifications by hitting the bell icon. Your participation means a lot to us. Thank you.